Golden Rule Radio is brought to you by McIlvaney ICA. ICA has been America's foremost precious metals brokerage firm since 1972, helping you build a strategic precious metals portfolio. Call 800-525-9556 to buy gold, silver, platinum, or palladium today, or go to McIlvaney.com. Welcome back to Golden Rule Radio, a new year, entering 2022 with the first show of the year. And unfortunately, I think the best way to start, you guys, is probably with the harsh reality of the declining numbers of last year, and we'll get into a little bit of the fundamentals on that. But gold finished 2021 down 6%, silver down 14.6%. Platinum ended the year down 9%, and palladium closed the year down 20%. It was the big loser after being the big winner in 2020. All of that is the reality. Instead of us getting into the nitty-gritty right away on the weekly numbers, it's important to bring a year to a close, and we will draw some conclusions and some encouragement. So without further ado, Miles, do you want to tell us where we are and where we're going?
Yeah, Tori, I think it's important to look at these numbers, both positive or negative, because that's what you get in markets, right? You get some positive and some negative. And we've been talking a lot about gold and its long-term bull market starting back in December of 2015, up significantly since then in this 18-month corrective phase that we've been in, this sideways pennant pattern, currently sitting at around 1,800 or a little bit over 1,800. So if you look at the way this is funneling down, I think the breakout's coming. Your traditional pennant pattern, you usually have a breakout of the triangle somewhere between 50 to 70% of the length of that triangle. Could be, if you were to draw it all out on a chart. That tends to be the average. Now, the interesting thing we have seen with gold specifically, and I put this, I believe, on the chart last week or the week before, is while gold is not putting in dollar price higher highs, it has had multiple breaks of the top end of that pennant a few times over the last year, which is extending out the duration, the time duration of how long this pause is going to last. That, to me, is optimistic for gold. We know we're in a gold bull market, given the shift, given what, say, Rob and I talked about last week, and we've mentioned a few times over 2021, the comparison between the price of gold versus the supply of money, the M2 money supply going back over the last 40, 50 years. So I remain optimistic long-term for gold and optimistically pessimistic because every time we get a lower dip down in gold, it provides the opportunity to add to your position for the expected long haul. All I know is I've been in the precious metals market for 17 years now, and looking back to where gold was when I started at $350 compared to $1,800 today, I don't know many other markets that are averaging over 20% a year on that type of time frame. So as long as you're looking through gold through clear-colored glasses on a long enough timeline, I'm very pleased with where gold's going. And frankly, I'd like to see us, as you can see on the chart here, come into this top end of this declining trading range and maybe even push back down one more time. That would be fantastic. The problem is we're running out of real estate. We're going to have a breakout soon. And I'm really hoping we don't miss one more chance at an opportunity to add to ounces before we see significant gold increases.
Speaking of opportunity, Miles, we're going to put one in front of everyone. Don't know how long this opportunity will last. I will note before I go into this, with gold having in the last 12 months, since the low in March, we've had 4 higher lows with gold. And that's a reflection of buyers coming in to the market to support the price each time the bears have been trying to drive it down. And on the flip side of the gold price is the dollar, and the dollar index is at newer highs. You know, it's been holding up near 97, it's in 96 range. And being at new highs with the dollar, you're not at new lows with gold. So
yeah, I think that's an important point.
I think it's a perfect point to show this is an opportunity. And so we're going to put one in front of you, one that we haven't been able to offer in a while, specifically on a product that we've been able to acquire, which are angel gold coins. France made in the late 1800s 20 francs, and they put an angel on them starting in 1871. And who wouldn't love an angel, right? An angel to guard over your wealth, guard over your life. Well, there's a really neat legendary story about this angel that actually had been designed and created as a guardian angel back almost 80 years before they actually made them in the late 1800s. And the guy who made it, Augustin Dupre, he has this story where in the Reign of Terror in the late 1700s, 1790s in France, the Reign of Terror, he was about to be executed by guillotine. Awful way to go, I'm sure. I don't know what a good way to go would be, but
I want to go like Betty White in her sleep. That's a good way to go.
there you go. Very peaceful. And so he was about to be executed by guillotine. And as he knelt down to have his head chopped off, he took this lucky gold coin that was in his pocket and rubbed it, and all of a sudden a lightning bolt struck, which terrified people around. And his execution was delayed by 6 months, and then he was let free. He says it literally saved his life, and so the legend was born with this angel. And then 80 years later, roughly, France, after Napoleon III, was taken over in 1871 by the Germans, and they ended up making these angel coins in 1871, made them from 1871 to 1898. And they put the angel that Augustine had designed on the coin. So it's called a lucky French angel. And we were able to acquire some in about uncirculated condition. A lot of coins from that time period, if you think about it, that was money. So this coin is not a full ounce of gold. It's 0.1867, so it's just shy of 1/5 ounce of gold. And what's neat about that is that that might seem like an odd amount of gold in a coin to us here in the United States. We deal with half ounce, 1 ounce, quarter ounce, ounces. Well, this is 0.1867. Well, where'd they come up with that number? Well, France used that amount of gold, as did Italy, Switzerland, Belgium, and even Finland. So think about this. Right in the heart of Europe, from the bottom tip of the boot of Italy, all the way up to Belgium, all the way across to Western France, right in the middle of Switzerland, all of those countries use the same exact gold weight for their coinage. And why'd they do that? So that they could trade and they could accept each other's currency across these borders.
So the European Union's been around 150 years, is what you're saying.
Probably longer, but there's been war and strife and all that. But that was used. So it's actually a very common size for an old coin, 150 roughly years old, very known, very recognized. You take it to anybody who deals with gold, they know what a French franc or a Swiss franc or a Belgian franc or an Italian lira or a Finnish marca, they know what amount of gold is in there because they all use the same amount of gold, 0.1867. And these have an angel on them, a little bit better than the coin that they made after that in 1899, the rooster. It went from an angel to a rooster. So I'd rather have an angel, I think.
Yeah, I don't think the rooster's calling lightning down upon the heads of your enemies.
It's waking you up and making your head feel just about the same as it would if it got chopped off sometimes, because the rooster wakes you up. But this angel coin is a lot rarer than the rooster that they actually restruck later in that, and we could tell you more about that. But the angel was used in all of these different countries. I mean, again, all the way even up to Finland, they used the exact same amount of gold. So if you think about this, okay, so gold back then was $20 an ounce. Everybody knows a U.S. old $20 gold piece, $20 an ounce for an ounce of gold. Well, 0.1867 times 20 is about $3.75. That's how much it was back then, roughly speaking, in those terms of dollars back 150 years ago. So if you think about $3.75 back then and a $20 coin being $20, well, you can think $3.75 was probably used as money and circulated a lot more, which is why when we find angel coins, most of them are circulated. If you go and poke around the internet, there might be dealers out there who have angels. They are not in the same condition as what we have. A lot of the coins that you're going to find from that time period are going to be very heavily worn. Some of the gold's going to be worn off it. It's a very circulated product. These are almost uncirculated. They're in very good condition. And that's what we have to offer you today. Opportunity with the gold price basing, I think. The dollar's at a high, gold is not at a new low. I think this is an opportunity, and this is a specific opportunity we're going to put in front of you. So feel free to call us. We can talk about that. And Just to note, $3.75 back then, multiply that times about 100, and that's what they're going for today.
Just like the 1 ounce American coins. So, Robert, you started that whole thing talking about the fact that buyers keep coming in and supporting. We're hitting higher lows, and that was indicative of the gold market in general. That was indicative of what we saw corporately, with more than 75% of all transactions were buys, not sells, right? So there wasn't this massive selling this last year.
2021,
That's correct.
Buys versus sells.
That's right. And so you do have that opportunity. You also are coming into this seasonal trend. We were very honest on this show in October, November, predicting a December low. We also are honest in pointing out that January and February tend to be two of the best months of the year, historically, annually, for gold. So it doesn't surprise me a bit to see us, even though we've gotten hit here 2 of the first 3 trading days, we're still at 1810 on the gold price. And that's after a Fed announcement that drove it down about $15, which we'll get into in a little bit. I also agree with you. Great buying opportunity. The issue that every firm has had has been product availability. So this is a great opportunity while there's availability, and the sheer magnitude of the number of those European fractionals we went through last year, it's just not going to last.
Yeah, that's just one coin. I kind of put that same angel coin in the same category as the other European fractionals that we sell. You've got British, Swedish, and then all those other countries I just mentioned. A lot of those countries have a different amount of gold, but those countries, France, Switzerland, Italy, Belgium, and Finland, all have the same. And so they're pretty much in the same type of category because they were used as currency. They're smaller denomination. We're not going to have these angels forever, but we would have some kind of product like that, hopefully, but it's getting scarce. I mean, just from our buys versus sells, from our inventory, how many we went through last year, it's not going to be just sitting on the shelf. I think when this gold market does finally make the next move, product's going to be scarce.
There's so much more money that's been made over the last 12 years. So much more money in the system that if the same percentage of that money moves into the physical gold sphere and those prices have been relatively unchanged, that sucks up so many more ounces out of the market, and we're already seeing it. We saw it in 2020 and 2021, especially in the silver premium. So let's transition a little bit here, Miles, into the silver charts, because we still have premiums. We still have supply and demand issues.
Yeah, I think the premium discussion is a great transition point because you're coming out of talking about, say, what we call the semi-numismatic category of gold coins, where you're buying coins with the age of rarity, but not with the high price tag of being the finest known or something like that. And we talked about this a number of months ago, but the idea of premium within, say, the rare coin gold market compared to the bullion coin gold market, just like we talk about the ratio between silver compared to gold, or even different products within silver eagles compared to silver bars, so on and so forth. So it's great when you can look at something like, say, these French angels or Italian lira or British sovereigns, Dutch guilders, all these old European coins, which there are tens, in some cases hundreds of millions of them out there today. So people know what they are. They're easy to get rid of at a pawn shop or a coin shop or anywhere else you may have an emergency and need to sell them. But you're getting into a 120-year-old coin for almost the same price per ounce as a modern-day minted coin. I don't know why you'd miss out on an opportunity like that. Worst-case scenario, something like this does just as well as a gold eagle does. But best-case scenario, you could be looking at a significant increase in value as, like Tori, you were just mentioning, people get more interested in gold in waves, and it's very likely coming off of this long sideways, very healthy trading pattern in the long-term bull market in gold. As that price moves into that next upward phase in gold, gold's going to get popular again. So looking at something like old historic European or U.S. coins could be the thing we're talking about this year. Last year, the year before, we were clearly very focused on things like silver and platinum. Well, look what the silver ratio's done. We almost got down to average here a few months ago. We almost got all the way down into the 50s. In fact, I think we did get to 59 at one point, if I wasn't mistaken.
No, we got to 62.
Okay. So we almost got down into the high 50s, stopped just in the low 60s. Well, that's very close to your 40-year average gold-silver price. The gold-silver ratio play, while the ratio's back up in the 70s, pushing into the 80s on a bounce, You have to be fluid and you have to be willing to transition your positions. So in silver, I'm still arguing for larger bullion bars and things like that where you're just getting the best bang for your buck because of what you just said. The incredible premium you're still seeing on things like Silver Eagles, Silver Maple Leafs. It's way more cost effective to buy a 100-ounce bar. But what if you don't have the money to put into a 100-ounce bar? Buy a couple French Angels. You're getting the same type of play, the same type of potential ratio move, different type of ratio, gold to gold instead of silver to gold, but you're getting the same type of potential, just in a different type of product.
That's true. And you mentioned the quantities of these that were made. We have to note that, yes, there were tens of millions in some cases with some sovereigns, I think over 100 million of them made in these vast time periods in the golden era, late 1800s and then early 1900s, but they were used as money.
Right. How many actually survived in good condition?
Right. So when our numismatist, our coin buyer, is looking at them, there's a lot of them that are just completely garbage, and other dealers sell them. They're completely circulated. They've even got less gold, I would say, that's been worn off of them, and they sell at a lower price. And the ones that have survived in better condition, that's what we're talking about. Something that's a very quality coin that has survived. So, I don't want to put many numbers out there, but like maybe 3 of 10 that exist maybe have survived in that condition. And that's what we're very picky about when it comes to an older coin. The condition is what matters. It's like buying a car. You go on Kelley Blue Book and you look at the price of your used car. Well, it has condition, and that changes the price, right? Just like a house. You want to buy a house that's been rented for 10 years or you want to buy a house that's been remodeled or brand new. And that condition is what matters when you're dealing with old coins, which is why you have a difference, slight difference, but still a very distinct difference between a very circulated old coin and a one that is 100, 150 years old that's in a good condition.
Well, what's the condition of our current currency?
I think it's like gold coins.
Yeah.
I know it burns a lot easier than our old currency used to.
Yeah, nobody cares if there's wrinkles and dings and stains or anything else on it anymore. It's just paper.
Yeah.
In fact, it doesn't even have to physically exist, but its condition is actually obviously greatly deteriorating, even though the U.S. dollar index isn't reflective of that. You talked about a pause in the gold price, Miles. Well, there's been a pause in the dollar index.
Yep. Yeah, Tori, there's definitely been a pause in the dollar here since about November, just like there's been kind of a pause in the euro on the flip side of the chart. But the dollar peaking out at about 104 again back in March, just following the initial COVID drop, and then it's been all downhill since there. So since the beginning of 2021, we have reversed back up from just sub 90, around 89 on the dollar index, back to about 96, which is your 618 correction on the way up. And we've been paused there for the last couple of months. We opened the show at least mentioning the concept of there being a Fed announcement here recently that did have a little bit, but almost negligible effect on the gold price short term. It also had a pretty negligible effect on the dollar because they were hawkish in their speech.
Yep.
And nobody bought it.
No, anymore it's going to be now, we're going to watch what you do instead of what you say. So they have the power to move markets with the microphone. But you're right, the dollar declined a little bit. All the equities markets declined a little bit. Every cryptocurrency, the major ones, are down 5% today. Gold declined a little bit. But the dollar index is still in the 96s. Gold's still over 1,800. So we're just sitting here in this pause.
Right.
And I think that that's okay. It's providing a respite. It's giving you an opportunity here to step in. But the Fed did come out far more hawkish. A couple of key quotes that we've got just from those minutes. Given their individual outlooks for the economy, the labor market, and inflation, it may become warranted to increase the federal funds rate sooner or at a faster pace than participants had earlier anticipated. Now, you've got to watch the market response to that. So far, not so good, which will dissuade them. Another quote here. Some participants also noted that it could be appropriate to begin to reduce the size of the Federal Reserve's balance sheet, could be appropriate to reduce the size of the Federal Reserve's balance sheet relatively soon after beginning to raise the federal funds rate. So first comes a rate hike. They've already started tapering, and they'll see how the markets respond, and then they can talk about reducing the size of the Federal Reserve's balance sheet. It's all speak,
It's
no
so
action.
vague.
It's
Leaves
so
them-
vague.
I mean, it's not just wiggle room. I mean, they've got the whole planet to move around with that language.
Totally. And yet we'll see how the markets like it. So far, not so good. The NASDAQ has kind of priced some of this in. A lot of that was just the FANGs. There were essentially 5 stocks that carried the NASDAQ in 2021. So are you surprised that we're seeing a dumping of an overbought category of assets? The NASDAQ's down 7% to start the year from the highs. You know, it was down over 3% today alone, over 500 points. That doesn't bode well. We're a third of the way towards a bear market just the first week of the year.
Well, yeah, a lot of the little predictors about the stock market are how goes the first trading day of the year is how the whole year is going to go. And if that's the case, if the NASDAQ is any indication of the first day of the year this year, boy, that's a big red candle.
Yeah, it is. And Rob and Miles, I mean, you guys have done a great job of covering the money supply issue and the impact, like overlaying that gold chart with the money supply chart. If you're fearful that gold's going to come down aggressively and move against your portfolio, one, it's a diversification. It's X% of your portfolio that should always exist in your portfolio. Two, it's not always going to go up, but you take into account 2020 and 2021, you have incredible return averages over the course of those 2 years, both in gold and silver. But thirdly, that money supply is the big deal. So no matter what they talk about doing with rates and tapering and what the bond yields, you know, yeah, they're over 1.7%, putting downward pressure on gold. Who cares? What are they doing with spending and debt? We're at 29.6 trillion. They just raised the debt ceiling to 31 trillion. They're continuing to try to pass this social spending package of over $2 trillion now. And all of that is what matters more. Watch the money supply. If you get the continued COVID shutdowns and they have to stimulate, I mean, he's talking about stimulating the meatpacking industry by spending $86 billion in order to drive inflation down. Like, you're going to spend more to try to fight inflation. That's what we're up against. So there's a paradigm here that, in my opinion, is not going to shift in the foreseeable decade. And that's the money supply paradigm.
And as all you see this currency devaluation increase, hard assets, commodities, costs of living, especially things like precious metals, are going to follow it right on up.
Thanks for listening this week. You can follow us on Twitter at ICA Gold, like us on Facebook, McIlvaney Financial, our website, McIlvaney.com. You can always give us a call, 800-525-9556. Thanks for listening. Have a great week.